What's going on, everybody, and welcome back to InvestQ. And as you know, last week, BigBear.ai did report their second quarter earnings. And if you were one of the people that had the personal opinion that the stock was going to absolutely explode after earnings, that wasn't the case, as you do know. Currently, BigBear.ai is trading at $3.01, and the way that the price action reacted was in a negative to bearish way, because once the earnings report came out, it did dip down and then it stabilized back to around the price action of where it closed off on the Thursday market session. So after spending the weekend reading through the earnings release, the financial statements, and going over some of the commentary from management, and also just looking at other online investor communities and just hearing the discussion from them, I think that there's a pretty simple explanation. If I'm I already can only assume that lots of people have come to this conclusion, but there are some also that still have not and are still curious. And in my opinion, I do think that this quarter was not bad in any way. I do think it was pretty good, but it also just wasn't the type of quarter that completely changes the investment thesis overnight. Instead, what the case probably was that this earnings report showed something that is much more important than just the headlines alone. It's the fact that BigBear.ai still appears to be executing the strategy that management has been talking about over the last several quarters. So today, what I want to do is break down the positives, the negatives, and explain why I personally believe that the company still appears to be on track. And again, as always, this is not a financial advice. I'm simply sharing my own research and my own personal opinions. Now, a lot of people were just asking, a lot of people they were asking if earnings was good. They're also curious about why the price action reacted the way that it did. And the reality of it is stocks don't move simply because revenue increased, which it did. As you do see here, it's up 13% compared to 32.47 million in Q2 of 2025. So it's a 13% year over year increase of 36.7 million from 32.47 million. And the quarter, this quarter, in my opinion, with that 13% year over year revenue growth and the fact that there also was improvements in gross margin and how management reaffirmed full year guidance again, which I really did like, even though that all those positive developments were they did appear in this quarterly report. One thing you have to take into consideration is they didn't raise guidance. So even though it's good to reaffirm, if they raised guidance, it probably would have been a little more it would have been more hyper bullish, and during the earnings call, you would have probably seen more buying volume. Again, not guaranteed, but that's something that could have happened if Kevin McAllen and on the earnings call just straight up came out and said, "Hey, we're gonna raise guidance, and we expect the revenue to be even better than what was anticipated between that 135 to 165 million dollars in revenue for the fiscal year of 2026." Also, they didn't announce a transformational type of contract, even though they did, for whatever reason was the case, because I was curious, because in the report, let me just pull it up. In the report, it showed that they had 20 plus contracts that they acquired, or that they gained, if I'm not mistaken. Yeah, 20 plus new contract wins. Now, a few things that confused me just a little bit. First off, as far as I recall, there hasn't been back to back to back to back to back to back types of reports mentioning all these different contracts. So I am curious about that as to why that was the case. And also, even though we have had some pretty recent and positive developments, specifically, let me see, where's the press release tab? Specifically, I'm talking about the Dutch regarding Panjam with the expansion that they've had with the technology. One second. And BBAI recent press releases. There we go. So I'm specifically talking about, besides the second quarter results, I'm talking about how with the expansion with the generative AI platforms, which is very good because again, generative AI platforms is part of what has helped with the increase in gross margin, and then also specifically talking about the Panjam, how it received Dutch national approval. Quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. So even though we've had a few positive developments, I am curious as to why they didn't give more mention to these new contract wins. And also, there wasn't necessarily any type of major surprise that forced investors to completely reprice the business. That wasn't there either. And even though this was a positive quarter, I would say that since there wasn't something that can be perceived as extremely hyper bullish, this kind of muted the price action in the short term. Now, again, going over the positives though, again, revenue, it did increase 13% year over year. Gross margins is at 25, increased year over year from 25% to 32.8% this year. And again, still, you got to take into consideration that they still had 20 plus new contract wins, and they had $410 million in cash and investments. So first, with that being said, all of these are positive developments and you can't overlook that. And these were, in my opinion, from the report right here, the most positive developments that we see, especially when it comes to gross margin, how there was emphasis on their higher margin software revenue. There was, and again, they also highlighted the Ask Sage acquisition that was also mentioned in the earnings call, and I did like how Kevin McAllinan talked about that, and how the Ask Sage acquisition is beginning to represent a larger portion of the business. And to be clear, if that trend does continue, it could become a meaningful driver of profitability over the long term. And again, the company, with the announcement of the 20 new contract wins during the quarter, that is encouraging because it demonstrates that they're continuing to win business across government and defense customers. And again, reiterating that management did reaffirm the 135 to 165 million dollars in revenue for this year. So to be clear, nothing about this report suggests that management believes that the business is slowing down in any way, but I guess the market viewed this as good, but not good enough. It's as simple as that, in my opinion. Now, also, this quarter highlighted how much stronger the balance sheet has become because the company, it finished with approximately $410 million of cash and investments. And stockholders' equity increased to roughly $770 million. And it's up significantly from the end of last year. And at the same time, total liabilities declined substantially following the conversion of debt earlier this year. Now, why that matters is because management now has significantly more financial flexibility. And whether it's investing in new AI products, if they're still going to continue expanding operations or pursuing accretive acquisitions, they're operating from a much healthier financial position than they were just a year ago. Now, that doesn't mean that everything was perfect, as you know. On this channel, we like to look at the bull and the bear case of any stock that we cover. And operating expenses continue growing fast in revenue. And administrative expenses increased meaningfully year over year as well. And adjusted EBITDA remained negative at approximately $11.6 million. Also, operating cash flow continues to be something that investors should monitor closely. And for the first 6 months of the year, the company used roughly $40 million in operating activities. Now, some of that does relate to acquisition integration. It also relates to working capital and investments in growth. But investors are eventually going to want to see the numbers continue improving, and they want to see that gross margin continues to improve in the right direction, and management needs to demonstrate that those improving margins can eventually translate into stronger profitability and healthier cash generation. And another thing that I want to talk about is regarding this bad boy right here, which is the backlog. So I've seen a lot of discussion regarding the backlog, and again, the company reported that it was almost at $270 million. Exact number is $269.6 million between December 31st, 2025 and June 30th, 2026. And that signals an increase of 9%. Now, what I also have heard is that some investors have also pointed out that remaining performance obligations reported under accounting standards are significantly lower. It's also important to understand that those aren't exactly the same measurements. Backlog is management's broader view of future contracted work, while remaining performance obligations follow specific accounting rules regarding committed revenue recognition rather than focusing on one metric alone. And I'm going to be watching whether the company continues winning contracts, if they continue to expand their customer relationships, and ultimately if they're able to convert those opportunities into actual revenue. So for me, the biggest story isn't necessarily what happened this quarter. It's what management expects to happen over the rest of the year. They reaffirmed their full year guidance, and if they achieve that guidance, the second half of 2026 should noticeably be stronger than the first half for the fiscal year of 2026. And that means that investors, they should be watching the next couple of quarters very closely, and they're going to be watching out to see if revenue accelerates, if margins continue improving, and if contract momentum remains strong. And I also think that investors could become increasingly optimistic about where the business is heading. So now the main key is none other than execution. So with all that being said, that's all I got to talk about on BigBear.ai. And let me know what it is you think about BigBear.ai. Let me know what you thought about the quarter, and comment below what it is you want to see in future upcoming videos. And if you do enjoy the content, feel free to hit the like and subscribe button, as I do appreciate the support from you guys. But with that being said, guys, David over here at InvestQ out. Stay safe, and I'll see you all in the next video. Peace out.